All right, hi everyone. Welcome to day three of this 30 favorite indicators uh, event. This is Synergy Traders number 58, live on TimingResearch.com. And these are another full day of top educators providing actionable info on the indicators that they use every day in the markets. So this event is brought to you by TradeOutLoud.com and TimingResearch.com. And of course, these presentations are for educational purposes only. Trading is not suitable for all people. Please consult a financial advisor and only trade with money you can afford to lose. All sessions are being recorded individually. Those are available on TimingResearch.com. Also, if you search for Timing Research on YouTube, Substack, or your favorite podcast app, you can find them there as well. So, to open the day for us, Jim, the option professor of optionprofessor.com, is here. So I'm going to turn it over to him.
Okay, thank you, David, and thanks everybody for being here. What I'm going to try to do today is I'm going to try to give you basically three areas. In the first half of the meeting here, I'm going to try to give you a review of the markets and give you my views on what I think the future holds on them. And then I'm going to get into some sectors that have been left behind because I'm noticing that there is some interest in getting into the stocks that are playing catch up. So I'm going to go into a few of those areas because, when you're dealing with options, markets that have already run up, the call options are quite high. And ergo, it's more difficult to make money with them because they're discounting through the implied volatility further upside. So, sometimes getting the ones that are coming out of the gate is the better way to go. In fact, in the second half of the broadcast here, I'm going to show you how I go about going with breakout ideas where the options are, in my view, dirt cheap and they expand dramatically when you get the breakout. And it's been very, very successful for me. And I'm going to share that with you today. But that'll happen in the second half. Let's go warm up here by talking about the stock market itself. Okay. So the stock market, as you can see on my screen, the S&P 500 was going along merrily. We go along, and then came the tariffs and the lawn, the rose garden, whatever wherever Mr. Trump was standing. He came out with that board, right? And the board had all these extremely high tariffs that other countries are charging us, but also indicating that we were going to meet or beat those rates possibly. So that made everybody have to refigure their earnings forecasts, right? Because if the tariffs were 150% on all these countries, there's no question it would have had a dramatic effect on the economy, dramatic effect on earnings and the GDP. So everyone had to bring down their earnings estimates. And when they brought those down, and of course their PE ratio, you're not going to have a high PE ratio if you're in a recession. So the bottom line is that everybody had to reassess, and that's when big money, and I'm talking about institutions and high net worth investors, all got out. And the funny thing about it is the retail guys kind of bought it, them and market makers. So then on April, you can see right here, this is April 4th, and then he changed his tune on the 9th. Okay. And when he changes his tune, everybody who's short obviously is grabbing their profits, right? And also, once the red line turns up, you're now looking at people coming back in and reallocating because they really deleveraged during this drop. So they've been reallocating and then it goes up. And a lot of people thought it might bounce to 5,800. Okay. Then it starts getting above 5,800, right? So now they have to come back in, re-leverage again. And that's what's been going on. And that's what FOMO is all about, fear of missing out. This is from here to here is basically a fear of missing out kind of deal. It's also that the news is getting great in that they passed the BBB, big beautiful bill, which means now that the tax structure is going to be great, and that there's going to be stimulus to the economy. Some people are saying $500 billion stimulus to the economy. Well, that's a heck of a tailwind, right? So that was a big thing to get resolved. And then, of course, these tariffs seem to be getting closer to resolution than further away. And the bet right now, the reason the market's not reacting to 15% to 50%, which is what Mr. Trump said recently. The reason they're not reacting to it is, first of all, these numbers are not worth the paper they're written on because they can change all the time. The second thing is that the market is assuming that the increase in price will be eaten by three areas. One is the person who's producing it, the foreign country. The other is the distributor, guy who brings it out and distributes it to the stores and everything. And then finally, the purchaser, the consumer. So if you take 15% and you divide it by three, it's not that much of a bite. If that's the way it goes down, that's not bad. If that's the way it goes down. If it goes down that one of these three guys don't want to play ball, meaning what? The guy issuing the goods is not willing to cut his price or eat anything because there's not much of a margin in the thing to begin with. Or two, the guy who distributes it, the Walmart, the Costco, whoever it is, he's not going to eat too much because that'll go into his margins, and ergo his earnings will be not looking so good, and ergo his stock will fall apart. So he might not want to play ball. And then the last guy, of course, is the consumer, who at this point, I mean, you'd need a baseball bat to stop him from spending, because I mean, they just keep spending and spending and spending. And that's, of course, why stocks like Affirm and Upstart, which I'll talk about later. Upstart, I'm all over for a long time now. They loan money to people, right? Affirm, and these are point of sale type stuff a lot of times, where you're at the store, and the Jiffy Lube guy tells you need a brake job, and all of a sudden you don't have the money, so a firm is there to loan you the money, point of sale. So that's going on big time. And so again, consumer, the distributor, the Costco, the Walmart, etc., or the guy producing it, if they split it evenly, maybe it's not that big of a deal. If one of those three guys don't want to play ball, then of course I think things would change. And of course, the market has not discounted anything like that at this point. July is a very good seasonal month. So let's enjoy July, because August, September, and October, they tend to be not that great. And we're entering that time frame at extended prices. I mean, extended means that the moving averages are in the 6150 level, and you're way up at 6400 almost. Actually, on the future, you're above 6400. And if you look at the longer term graphs, as you can see, this is why I was bullish when it came down. This was the high of 2022, and this was my blue line telling me that's where it's going to stop. And it did. But now we are way up here again, and that is called extended. So all I say is let's enjoy the ride, which I'm doing 100%. But let's not, drink too much booze here, because we may need to get a sober driver here pretty soon. Now, what has helped me remain bullish and buy calls and calls and calls for the last 2 months? I'll tell you what. What got me going was the VIX. Now, if you look at the VIX, it's at 15, which is really low. But you know what that means? That means people are really confident and they're really complacent. And when you go back to those high net worth investors and those institutions and you tell them you got to buy more stock because you are supposed to be at 60-40 or 70 or 30-70 or whatever, and we got to beef up that part, they're not going to fight you on it. Why are they not going to fight you on it? Because the VIX is at 15 and it's going up every day. So it's starting to look like money market anyway, right? Right. So that's why this thing is just feeding on itself, because the volatility is attracting people. And to show you what I thought, since May here, you see May, when my blue line turns down, that's when I started buying my calls, right? Because it was way up here in April. And then in May, it starts giving me the idea that the trend is down. So from the middle of May to now, I've been a call buyer, and I'm very happy to say it's working out well. Now, it's not always going to work out well, but I'm not going to get off a train that has no evidence of stopping. So if there's evidence of stopping, I'm all ears. If you're going to tell me you're picking a number out of your ear and it's going to stop there, I don't have much time for that. So I like to follow the trends, and basically, but I like to follow the volatility, because if and when we are to get above, and I'll give you a clearer picture here. If we were to get above 1750, That would be a point where you better start playing defense. Okay. And that's not happening today right now. And this is way, way down. In fact, if you look at the RSI down here, it's down at 27. So it's very low, and it's oversold. So it is due for a reversion to the rally. And will it happen in August and September and October? I believe it will. But my belief is not what I bet on. I bet on evidence, and there's no evidence of a turn. When I get a turn, I'll start doing that. Okay. But right now, because of the VIX being so low, because big money and institutions are still shoring up their asset allocation models, it's a situation where you got to enjoy the ride and take advantage of the seasonality, which is July. Okay. So if I look at the S&P and the QQQ, let me give you some hints on when I would be thinking it might be a problem. Okay. SPX. We'll use the SPX. Of course, SPY and the E-mini and all that can be used, but this is the base of what I use because this is the cash, right? Okay, so if I look at the 1-year graph, I can see that the first sign of any trouble would be this red line up here, and that's at, I put the SPY up. Let's put the S&P up here. Because you can make the correlation, and many of you trade different vehicles. Some of you trade the SPY, some of you trade the SPOOs, as they used to call it. Okay, so again, on the S&P itself, obviously this number up here would be the first thing I'd be looking at, which is 62.93, which obviously we're over 100 points above. Now, if I want to keep it on the shorter, but again, while these things are up, let me explain my averages here to you because this is really how I do my stuff. You got 5 averages here, right? 5 averages. Red line tells me when the trend is changing. Green and blue tell me if we're going to go on a long run or a short run. Purple is the garden variety reversion to the mean. Gold is an excessive reversion to the mean. And that generally only happens when you get a situation like we had where the whole world is getting out of the stock market, like this. This is called a reversion massive. This is called reversion massive. You see, it couldn't even get through the blue line. That's how strong this market is. It did through COVID. When you shut down the whole nation, you'll go down to my reversion number, but not just with a temporary insanity with the tariffs. Okay, so on the 1 month basis, what are we looking at here? Again, greens up, red's up, greens up, blues up. I mean, where's the negative sign? Oh yeah, it's overbought. Is there a divergence here? Well, we got 72 here, and we got what? 74 there. I don't know, got divergence. I mean, I'm not, you got to have some evidence, right? I'm not Nostradamus, right? I'm just playing what I got, and I'm trying to make some money. So the bottom line is still good. Would I start loading the wagon up here? Absolutely not. You should be in there already, and this should be what they call harvest time. This is no time to plant seed, in my view. In my view, of course, you could and get away with it, but it's not an optimum time from the standpoint of the way I work. So let's enjoy the ride. And like I say, the first signs of trouble would be 6,300 or break under 6,300. Right now, you got 63, 69. Obviously, if it starts breaking under here, but you need to have these things pointing down if you're going anywhere decent. Like if they do bring it down and everything's still pointing up, this is a baloney trade. I call this a baloney trade. This is like some market makers or whoever they are trying to get everybody's stop out because they know the trend is up. So I can stop all these people out and get right back on the train. Look at all that volume I'd be able to pick up on the cheap. That's how I view violations against the trend. They're little, in my view, schemes for buyers to pick up stock from stop out people or people who think it's going to go down. They start shorting it, right, and then right back on the train. Okay, so I don't get caught in these kind of stupid storms. I call them stupid storms. I don't want to get involved in that. When they start crossing over and go down, yeah, I'll go with that. All right, so there you go on the S&P. Let's go over to the NASDAQ because that's where the action is. Now, again, Google announced that they're increasing their spending by 11%. Sure, if you're an AI guy, that was good news. Now, let's look at this thing here. Let's look at the 5-year graph. This is a weekly for you guys, weekly. It's over, it's obviously overdone. There's a big gap here between 490 and 500. I don't know if it's going to get filled, but if the news really changed, it could, because that's a gap. And you know how gaps get filled at some point. On the 1 year graph, again, extended, yeah, but not in a downtrend, not like this. You see, when it goes like this, that's when I'm on the down. That's when I'm on the down. You roll my stuff over, I'm not fighting you, but there's not rolled over. Same thing with the monthly. I mean, come on. This thing has gone and gone and gone and gone and gone and gone, and it continues to go. Is there a divergence up here? Your RSI is up here in the 70s, and you're at 62. On a short-term basis, okay, if you want to go hunting for something bearish, that's a little bit bearish because up here you're in the 70 area, and over here you're at 60. That is a divergence, okay? So if you're a really short-term trader, obviously, if we started breaking under red, that might be some kind of sign that we're rolling over. You go to the 30-minute graph. But again, where's the evidence of down on the 30-minute graph even? Not much, right? So the bottom line is there's not a lot of evidence to be anything but bullish right now. When it changes, though, don't look it in the face. Take action. Have defensive tactics, hedging tactics ready. Now, the one that's the dark horse, and I've been talking about this for a while, is the Russell. And the Russell is still not at the high point that it was in 2020. In 2020, let's go 5 years back. It still hasn't taken out that high, really, right? You had a high here in 2021. You had a testing basically the high there, and now it went down here. But once this happened, you see when my line hits there and then bounces off the reversion numbers, that is like one of the best things. Load the wagon at that point. The likelihood it's going down here has just reached a very low, I'll call it, in my opinion, zero. And so the bottom line is I've been very strong on this since 200, and I remain strong on it because, again, if we're going to get a discounted rate Fed either later this year or next year, well, that's going to be very helpful to the Russell. And these are very cheap stocks. Of course, many of them are not profitable, but it is a very underinvested area. And you know what? I'm going to show you something. This is called small caps. You know what's already made new highs after not looking so good? I'll show you. This is called the mid caps. And they were just in the doghouse with them as well. You see, doghouse? But look what they've done. They've gone up and made new highs. And I believe there's an outside chance, if not a high probability, that this guy here, over time, will do the same, which is the Russell. So I've been calling this for the last, ever since the drop in April. I said, this is the dark horse. Keep an eye on the dark horse. And the dark horse has been paying off. And again, it hasn't even gotten back to the former highs. So there's all types of upside potential, especially if we were to get what? Get an interest rate cuts. If it goes the other way, then and it can't get above these things and it starts getting under 200, that's big trouble for the Russell. No doubt about it. In fact, even now, I don't want it trading under 214, 215, because you see that blue line pointing down? I don't like that. And I certainly don't like it if the market's underneath it. So watch that 215 number if you're trading the Russell. Okay, so that gives you the three major indexes. Let's spin around to a couple of other things that I keep an eye on. And every week when I send out my alerts, I give you a review of how I think of all these things. So it's a nice little one-stop shop to get a little research in front of your face, you know? So let's talk about interest rates, because that is a big thing. I don't want to say that the administration is panicking about interest rates, but I've never heard of a Federal Reserve chairman getting fired because he's a lousy remodeler. But that looks like it might happen under certain circumstances. They're certainly putting very big heat on the guy. Well, they can put all the heat they want on him, but the numbers are coming out pretty strong. The unemployment is, although the continuing claims are rising, so that's not a good thing. That means people can't find a job. But the numbers today were very light again, so nobody's really getting fired or anything like that. So this thing, I've been playing this thing correctly the whole time, and here's why. My line here is blue, right? So obviously rates were going to start going up right here. So this is where you get bearish on the bond market, right? And you stay bearish. And then he cut. Remember, he cut 50 points in September, and the yield dropped down. So everyone thinks, oh, the yields are going to collapse. No, they're not. They're coming down to a point where you got to sell the bonds again. And then just recently, we came down here in April when we were having that flash crash with Trump, right? And the yield went down to 388. Everyone, oh no, this is the time. This is the time. You see, these lines are not pointing down. See, they're not pointing down. And when they're not pointing down, I'm not going to get bearish on bonds. I should be bullish on bonds. I'm not going to be looking for lower yields when my stuff is telling me that the trend for interest rates is still up. And you know how many people talk like that? I don't hear too many. I listen to Bloomberg, CNBC. What are they all talking? Rate cuts, rate cuts, rate cut. You know what I'm saying? You're not going to get any rate cuts until what? Until the trend changes. Now, if you got under 4% on the 10-year, actually, right there, if you start getting underneath what's the low there? 420. Yeah. If you got under 420, I would start buying the argument. Okay. But you know what? Things could surprise you because we don't know how their pass through of this tariff's going to be. Everyone's saying, oh, it's going to be a one-time deal. It's going to be a one-time deal. I don't know that. They don't know that. And if it's not that, this stuff could be going to 5% or more. So be careful about getting too crazy about we're going to get these cuts. We're going to get 5 cuts. We're going to get 6 cuts. We're going to get no cuts until this 10-year starts breaking under 4%. You got it? That's my view. And so that's the way I see it. Now, if you do break under 4.24%, yes, you've got a trap door. And you want to buy the hell out of the bond market because those yields will be dropping and those bond prices will be soaring. So everybody who's long bonds, you know what you're rooting for. You're rooting for a break of 420 on the 10-year and 4%, and then you're looking to go up and ring the bell. But you're not ringing any bell right now. In fact, you should still be a little bit concerned about obviously a higher rate. Let's turn over to the US dollar. Now, the US dollar has been an area that I thought was very important that it holds, and I'll show you why. The Dixie. Okay. Now, if you go look at the long-term graphs here, because that helps me, this purple line area, which comes in right around 98. Now, we've dipped underneath it, okay? But if it gets back above there and can stay above 98.50, you could have a reversion rally upward. And that would surprise people because everyone's bearish on the dollar. But this dollar is hanging on for dear life. And I think if he dropped interest rates, this dollar would maybe fall dramatically. And if that was the case, again, that would affect maybe stock prices as well. So the dollar is hanging on by a thread in the 98 area on the dollar index. If it were to give it up, I think the Fed probably knows this too. They start dropping interest rates and our interest rate differential goes out the window because, sometimes yields are rising over in Japan right now and in England. So again, if that were to happen, we could accelerate to the downside and that would take the euro up towards obviously 120, 125 easy, right? So keep an eye on the dollar because it's at a very critical zone right here and the trap door is right here. So we'll have to see. Looking towards the gold. I've had a very good time with gold because I think gold is trading very orderly. And I'll show you why. Okay, let's go to the 20-year graph so you can see on a long-term basis, gold is very, very extended. And it's going to at risk. It's at risk for what? A reversion to the mean. And when that reversion happens, it's going to shock a lot of gold bugs. And you know what? They always revert to the mean. You see up here in 2011, do you think they really thought it was going to go back down to 1200? Up here, did they think it was going to revert down? So again, there is a reversion coming, but it's not happening yet because the trends are not turned yet. But you can see here that where are we here? 75 on the RSI, and now we're in the 62. So it is a weakening market on the rally. Okay, so unless it blows out 3,500 and gets that RSI back above 65.70, there is a possibility of reversion. If it was to revert, you'd need to break under 3,300, and then you got 3,200 and 30.50 catching it on the drop. On the shorter term graph, again, this is where I just did a trade here last week. I thought it was going to break to the upside because, again, the blue line is rising. So when it's a consolidation and the blue line's rising, I think the probabilities are a break to the upside. So GLD had call options that were quite cheap there, especially short-term ones, and they really went up big time on that $100 drop. And of course, when options go from 1 to 5 or 2 to 6 or more, you grab the money. Because if you don't want to sell call options when everyone's buying them, you're not going to be able to make so much money. You got to sell into strength when you're buying the calls. Because if you wait for a correction, believe me, between the time working against you and now the price is working against you, I don't see how you get ahead that way. So I like to fade rallies, especially spike rallies, because spike rallies tend to be order imbalances that don't last. Now we're back into crunch time. You see, today's low is what? 3355. You can see my 24, 12, and 36 come in at 3354 and 3364. And now we're bouncing out of it. So there's a reason why it's bouncing. It came down to some support numbers. I can show you them right there. And now you're at 3374. So we'll have to see. If it were to break under 3350, again, that opens the door for a possibility of it going down. And these moving averages are right against each other. So if I was a guessing man, something large is going to happen to the gold market, and probably in the month of August. So keep an eye on it. In other words, if it starts taking off again above 3450, forget about those highs. It'll probably blow them out like nothing. And it might happen if they do cut on next week. If they cut next week, I think this thing, because I think the rumor got out that they were going to cut interest rates, and that's what made it pop. And now the rumor's going away. So we'll have to see. But this thing is not going to stay the same, I don't believe. I think it's going to move off of that line in a dramatic fashion. So keep an eye on gold. The next thing is just to give you a couple of ideas here on what's going on around the world. Because again, money, by the way, the US market has attracted inflows much lower this year than last year. So where's the money going? The money's going here. This is China. Okay, and some of the biggest investors in the world, like David Tepper and that Michael Burry, they have large positions in China. And according to their 13Fs, which were obviously dated, but I doubt they're ditching it if it's going up. I mean, so anyway, they've been bullish on it. Let's put it that way, and that's why they've been bullish on it. So China has been doing pretty good. Then you've got the emerging markets in general, and I'll show you those here. And they also have been doing good. So again, I'm trying to show you that there's things going on around the world that you don't want to lose sight of. And again, in my newsletter, I told people about this when it was getting above 30 or 43. So this has been an uptrend for a while. Now, the Europe one that I had the banks, because the European banks are extremely, well, they were extremely cheap, not as much anymore. But you can see it didn't take a genius to figure out that this thing was, after it had that April scare, this thing's been on a very easy ride with the blue line. And again, the blue line never turned down. So you knew this was probably temporary. And then it hit the gold, which is an extremely big reversion to the mean. It's always something you want to really consider buying against. Right? You always want to consider that because you can put your stop right underneath the gold. So you don't have to risk that much. Right? And you're buying it on the cheap. I mean, everybody's selling. Nobody wants a call option. And then look at that. So that's a European bank system, and they're making new highs now. So that tells you something right there. And then you've got some of the other ones like Mexico. And again, we're seemingly getting along pretty well with them nowadays. And there you go in Mexico. Okay. Again, everything got back on the bicycle. And so diversifying into Mexico has not been a terrible thing. And then the other thing is Japan. And again, they're having a little bit of, change over there with their leadership possibly. And so, but again, people are diversifying into Japan. Once they look at this. I own Toyota Motors, TM. And believe me, what a jump in equity I got on that. So the thing is once they knew exactly where the tariffs are, obviously they believe they're going to be no trouble at all. And everyone is agreeing with them. at least for now. That's a pretty big gap up, though. But again, that's an order imbalance for sure. So again, don't be surprised if you get it back and fill. But that gives you an idea, a little bit of what's going on globally. And again, every week in the alert, I try to help people understand what's going on, not only here, but around the world. And of course, the options. And let's go over two more things, and then I'm going to go into some strategies that I use to try to make money. Let's talk about crypto. And again, I've been very good on crypto as well because I'm following the trends. So let me show you how I've been figuring it out. That was Barrick Gold. Let's try to get to Bitcoin. Okay. So on Bitcoin, here you go. And I put on the 5-year graph because that's the one I use for Bitcoin. It smooths out a lot. Okay. I don't want to buy things after they move away. So when Bitcoin was in January down here, again, consolidating with all my averages, that's when I like to buy and get a nice run. Then it comes back to the blue line. See all this stuff I told you about? When they penetrate the blue line, somebody is trying to grab stock knowing fully well it's going back up. These are all sellers, stop lossers, whatever they are. They're getting spooked out of an uptrend. I don't want to do that. When these things all met here, this is one of the easiest times to buy in the fourth quarter of last year. You've got all my moving averages converging. You've got the blue line rising. In my view, there's just one chance on when it looks like this, and that's the likelihood of breaking up. So that's where you want to take your action. And then you also had a possibility in January to April to take action again. And then again. So again, and again, you get another pullback here. So you don't want to buy these things on a pullback and enjoy the ride. My favorite, one of my favorite ways of doing it, I'll give you three favorites. Coinbase, obviously. And again, you can see Coinbase, great place to jump on board right there. There it is, reversion to the mean. You got to pick your spots. This is called harvest time. This is where you plant your seed. And you just got to be patient and keep and be and stay alert. That's all. You got Coinbase there. And of course, I had this for a long time. And in my alert, I talk about long-term options as well. And these are some of the ones I put in for long-term because obviously I've been bullish on the thing. Now here, this guy here, right? This was the big idea we had this year early or last year, I'm sorry, when it was down here. I thought this was, now I didn't think it was going to go to 550. Of course I didn't, but I definitely knew it was going up in my mind. And again, here, this was the correction. And the correction, again, this is all a little bit of a little bit of somebody getting their stock taken away from them by whoever does that, brings it through the trend and then right back up again. So this was where you load the wagon on MicroStrategy. And then we just had a pullback to 350. And so the trend has continued. Now, the one that might be the next game in town is Ethereum. And I'll just use Grayscale as a guide here. But, this thing here, is supposed to be the big backbone of stablecoins, right? So if Tom Lee and I guess Peter Thiel, they both are involved with this company here, and I have started to accumulate here because I mean, if I want to make a play on this Ethereum, these guys seem to have an idea of what they're doing. If you look at it, this thing here, it went from $2 to 160. Obviously, that's why we don't buy up there. But now it's come down to fill the gap, and the blue line's there. So at least I'm somewhere near shoreline, right? So I wouldn't go crazy on this kind of thing, but I don't think it's a bad thing to keep an eye on if you want to get exposure to Ethereum, or if you want to do something with the ETF. There is the iShares. So I don't know that diversifying into this is such a terrible idea. If you think, like Tom Lee and some of these other people, that this is the future of, and this is a brand new deal, I guess, because it's only been around a little bit. It's already gone from 20 to 27. So it could pull back. Don't forget, got gaps here and everything else. So it could have a big pullback. But again, on a long-term basis, this is the kind of way that you could participate in that. And then the last thing I did want to mention was the crude oil. And then I'm going to start getting into some strategies here that you could pick up on. Okay, on crude oil, let's go to the September month. And let's take a look at what the prices are. Because I did pretty good with crude oil because I didn't think it was going to collapse. And I'll show you why on my 20-year graph. Okay, when you go down here to these lows, right, and my RSI is at 40, essentially, there's only two things in my view that's going to happen. You're either going to break through 40 and get an acceleration to the downside, or you're at the bottom. Now, once you got back above the purple line, which is, again, a reversion to the mean number, which comes in at around 62 and change, I've been bullish on oil. I know it has to get above 80 to make the big bucks, and I don't know that it will, but I'm not going to get bearish on it as long as that RSI remains above 40. And of course, we don't take out the 55 low. I wouldn't say I'm roaring bullish, but I will show you a vehicle that I've used to get bullish, and I have green things from it. So here you go. This is called Chevron. And again, you see my indicators all converged here. So you got to take your shot there, and then you got a big run. You got to get out. If you're buying calls and it jumps up like that, you got to sell out. Why? Because you got to sell calls when people want to buy them. If you want to wait till they don't want to buy them, you're not going to make any money. So the bottom line is then you're looking for a place to get in because you see the blue line's telling you you're in a bull market. So you wait for it to come back down and you load the wagon down here. Now you just got another run. You got to sell them out. And now you come back down. You load up again. And now it's in the process, I think, of maybe going up to fill that gap. And that's the story on oil right now. So that gives you a little bit of an idea on how I think about some of the things going on in the world. And again, I enjoy listening to all the news. So I assimilate it and I make up my own opinion from it. All right, I'm just going to give you a couple of different ideas here on sectors that might play catch up. Okay. And one of them is biotech. These are things that are way down and they may be turning. Again, with biotech, you have RFK and Doge, killing the industry, right? But they're now all seem to back away. The tariffs are supposed to be delayed now for a year and a half, so these guys could maybe reshore this stuff. But this, to me, looks like it bottomed out at 120. The trend is now up and is trying to break out. Could pull back, but this is a place to keep an eye on it. And then you've got things like Merck. And again, on Merck and Bristol Myers and places like that, you see, they seem to be trying to turn. And these babies came down from 130 and they went down to 75. So you're certainly not sniffing around the tops here. Okay. And if it can go here, you could go to 95, which means if you get calls down here at 80, which I have a couple myself, and it goes up there by September, you could have some action on that. So keep an eye on that. Next one that's undervalued that could maybe give you some money is the transports. And today we had news on the transports as Union Pacific is in talks with Norfolk Southern to possibly do a merger. That's good news, I think, for the sector. Now, there's a couple of stocks that are really down and out in Beverly Hills here. So let's just take a look and see if there's any turning point here. And this is UPS. And you can see it's been trying to make a turn. It's certainly down from 150 bucks down to 95. So I don't know if there's anything happening there, but keep an eye on it. And then, of course, you got FedEx. And FedEx looks a little bit better technically. And as you can see, yeah, FedEx is better technically. In fact, it's breaking out a little bit. And could it go up towards 260? Why not, right? So the bottom line is the blue line's rising. That's a good thing. These guys is now above these guys here. So keep an eye on some of those transports. They're certainly not in favor. I just showed you the energy one. And then, of course, you've got real estate. I read that Warren Buffett is rolling a lot of money into real estate now. I don't know if it's true or not, but it might be because real estate's out of favor. And I see from the ETF here, So a couple of companies that are in that sector that might be worth a look is Simon Properties. And Simon Properties is trying to make a turn down here. Not great, but like if you got above the gold line, it could do something. And Boston Properties, and since I went to Boston College, I always liked this company. And of course, technically, it looks better than Simon Properties. So here you go. And this thing looks like, again, it's building up here. The blue line, I like this better because the blue line's definitely pointing up. And of course, if it gets above gold, there's nothing stopping it. So this is the one that I would probably, be interested in. If it can show me it can get above $72. Because above $72, it could really run. So keep an eye on it. Keep an eye on it. Okay, so that was some of the out of favor sectors. Let's talk now for the last bit of time I have here on how I go about trying to make money in these options. Okay, I like to have a certain setup. Okay. And so basically, I'm going to show you the setup, and then I'm going to show you some of the very, very good performers. Now, like I say, not everyone will always work. So let's not get crazy here. But this is a pretty darn good way to go, in my view. It's certainly the way that I personally go. So let's take a look at some of the things that have gone on here. Let's look at some of the larger winners this year. Roblox. When did I get interested in Roblox? Okay, check it out. I have a convergence of my averages. I had a massive testing of the extreme reversion to the mean level. Don't forget, purple is a reversion to the mean. Gold is an extreme reversion to the mean. And they're generally a fabulous place to take a shot. But rather than taking a shot when it's down here, I like to have evidence of the trend. So once red turned up and green turned up and blue turned up, this was nothing but call, 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 right? So that's how I recognize Roblox. Another one was Hood. Not Hyatt. You just have to stay alert because things are always happening and formations are always happening. You just have to, you have to do your research. That's all you got to do. Again, traffic jam made the a test of the extreme. They all start pointing up. There's only one way to play it. Call, call, call. Like I told you, since May, it's a call, call, call world. Okay. Now, and hey, listen, now you got to be taking stuff off the table. You got to be hedging. You got to be careful because this is not cheap anymore. Okay. So you want to reassess your risk because it's not the same risk as it was at 40 and $45, right? Right. So you got to act accordingly. When I go through coaching sessions with people, they say, well, how do you protect yourself? I show you how you protect yourself. You go price out the 125 calls, find out what they go for, buy yourself a put at 100. And then if it goes under 100, you got insurance at 100. And if it goes up, you still got upside to 125. That's called a collar. And it's second nature to me because I've been doing this thing for decades. Okay. But if it's not to you, that's one of the reasons people come to me because it includes coaching and one-on-one coaching where you and I are looking at the same screen and we are obviously learning. Another big one was Joby. I mean, I've had many, 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 but I'm just giving you illustrations here so you get an idea that these setups are worth keeping an eye on. Again, you're down here and you are all converging, and then red turns up, green turns up, blue turns up. You get above purple. It's just a call, call, call deal. Okay. So, but again, you want your entry point, especially with call options, to be when not everybody's buying, because again, the premiums are going to be huge at that point, and that makes it a very rough racket to make money. Not only that, when I take a shot, I like to have a cheap option so that if I'm wrong, I lose a little bit of money, and when I'm right, I ring the bell in a very large way. So that's basically what we're looking for, and this is some of the ones throughout the year that we have. I talked about Upstart. Again, Upstart loans to, let's say, sometimes less than high quality creditors. And so they obviously make money by loaning them the money. This one again, all consolidation here at 45 bucks. Red turns up, green and blue, you get above purple. I mean, come on, that's where you can make a buck or two right there. So these are ones from May. I'd like to show you a little bit of more. Well, I'll show you another one here. And I can't take credit for this because I was reading the 13 Fs of Michael Burry, and I saw he had Estee Lauder. So I go, God, what's he doing with Estee Lauder? That thing's a dog. Well, so I said, I think I'll monitor it because he owned it even like down here. Now, I'm not going to step in front of a freight train with Michael Burry or anybody else. But if I start getting red and green and blue turning up, and then I get it above purple, well, I mean, there's going to be a nice little rally going on because, again, when all three of my guys are going up, it tells me we're going to go on a ride, right? We're going to go on a ride. So the bottom line is that's why, like I say, when they're not all turned up and we have a rally like here, it tells, and the purple's pointing straight down. Well, that tells me that this thing probably is not going to, this is not going to last, you know? But anyway, so sometimes I go after things that I see, see like that, even though it doesn't have the exact formation that I'm looking for. But, you know, if it has an opportunity, I'll still take a look at it. Okay, let's look at some recent history. Datadog. Come on, Datadog. Come on up. There you go. All right, Datadog. You see, this is a turn, right? That's great. But I got interested here because I see the yellow line. I see the red is almost hitting it, and the purple's right there, and green's right there, and they're all pointing up. The idea, and there's a gap. Well, that's enough evidence for me. I'm taking a shot, and I'm going with the 125 or 130 calls here because I think it's going to break up and try to fill that gap. Well, boy, did it not only fill the gap, it gapped above. And that's called a rainmaker, and that's called what they call, something that you're not counting on, but certainly you're not going to look it in the mouth, right? And you can imagine how much the calls went for up here with that kind of volatility. Now, of course, it came back down, and now it might be back on the bicycle, but it's not my cup of tea as much now because I'm looking for this setup where the options are cheap. The options are not cheap anymore because volatility's picked up. But that was one that worked out quite nicely recently. Another one that worked out quite nice recently, and this was last week, was XYZ. But it's all the same deal. You know, I'm looking for the setup. When I get the setup, bam, that's what I'm looking for. Because that's when I can put in a little and take out a lot. And if I'm wrong, I lose a little. And if I make a lot. So here's the deal. Again, you see the blue line's rising. The blue line's like the main highway, right? And now you've got what? A consolidation between 65 and 70, right there, 65 and 70. Now you got a gap. Okay, I don't think the probability. What's the probability it's going to go way down here? The only way it's going to do that is if they announce that blocks got some tremendously, surprisingly bad thing going on. Otherwise, the likelihood is it's going to pop. Now, this thing got added to the S&P, so hey, good luck happens when you're on the right side of the trend, right? But that was pretty nice to have it added to the S&P after I bought. So the bottom line is that there's another situation. So I'm looking for this kind of activity and a pop. And when it happens, you have, I think, a very good chance of seeing a pop. So those were two recently that happened. And, we've had a lot of other ones as well. Trade Desk was one within the last month. You see, yeah, first of all, we first got involved with it down here when it was breaking out of 50. You see, it's got everything turning and it's all bunched together. So that was the first one. Then we got rid of it. And or I got rid of it. And then basically you are in this, consolidation right around 70, 75. And I think it's going to pop out of there. So the bottom line is, and again, there's a huge gap. So that was another one that popped up quick. And when they pop up quick, from a consolidation, the premium expands dramatically. You grab your money, you run, and now you're looking for what? Another setup. And they're out there. They're out there. You just got to do the homework. And that's why people come to me because I'm doing the homework. So that was that one. And another one was Twilio. TWLO. Now, if you had any questions on something like maybe a stock that you own, you want me to take a look at for you, or if you had a question on how I'm doing this, or questions on exit strategies, or whatever you have, please put it in the chat box, and I'll be more than happy to take a look at it for you. Again, on Twilio, we had a situation where all the averages came together and it tested the reversion number. Options were very cheap, 120s when it's at 115, and as you can see, a nice pop. Another one from this week. And I still got this. I had a multiple position. When you have multiple positions, you can fade out of some and keep some. But you see, the options are cheap down here. And again, where did I think it was going? Let me show you where I thought it was going. You see this thing here is a gap. And you see what the low was there? 114, right? And where are we now? 116, 114. So this is the neighborhood that any remaining positions I have, I'll be making adjustments on, because this could very well be the end of the road here temporarily. But again, this is part of the real estate section that I was talking to you about. The money seems to be going into the real estate section. So that is where I got that idea as well. But again, this is where you have to play ball if you want to have maximum expansion of premium. I'll give you one that's another work in process right now. This was bought last week. PayPal. You got the gap, right? You got the blue line pointing up, right? You got a consolidation, right? Time to give it a shot, right? And now we're getting paid, because obviously the options that we bought when it was at 72 and now it's at 79 have gone up in value. Okay, so I'm trying to give you a little bit of an idea on what I'm trying to do by buying the options. Now, those are the setups that I think are the most high probability. That doesn't mean I don't look at different sectors and look for an option play in it, like copper with Freeport-McMoRan, or gold with Newmont Mining, or with Gold Fields, or whatever, or maybe in something like consumer discretionary. Maybe I'll take a look at Starbucks if I think there's an opportunity. Apparently, there's a put opportunity on Chipotle today, because obviously people are not as keen on Chipotle as they used to be. I guess maybe they got menu fatigue or something. But that stock is down in the 40s, and that's a pretty good drop on it. So I do come up with different ideas on different sectors. But if somebody asks me personally which one I think would be the best, I'm going to gravitate to the setups that look like this. And, there was a service, one of my subscribers showed me a guy who's doing something similar to this, and he's charging $4,200 a year to get the information each and every week. And I thought that was kind of high, because again, these things look like very good setups and very good probabilities, but there's still a risk that they don't happen, right? So, basically, what I'd like to do now, if I could, is explain how you could get this information each and every week. And it's called the Options Alert Service. And basically, I write a update every Sunday night. It goes to your inbox, and it goes over what's going on in the world, like I've been talking, right? And it also gives you some ideas, right? Like this is an idea. And sometimes it'll say a strangle on it. That doesn't mean you have to buy calls and puts at the same time. If this, like on this one, PayPal, you wouldn't have to buy the insurance put underneath if you don't think you need it. So what you'd want to do, since the risk is it's going to take off on you, you got to lock in the calls. And then you're ready to buy a put if need be, particularly like if you think it's a 90% deal that it's rising. Okay. So each week you're going to get ideas. And again, I've been outlining some of the ways we look and some of the ideas and how they've worked. And again, so I think it's very worthwhile information that comes into your inbox every Sunday night. It also comes with a master class. So what does that mean? That means that you're going to get a 3-session, 6-hour tutorial. And I've been doing seminars on this stuff for decades and decades and decades. And I've also, traded so many thousands of options. And again, this has been my job for a long time. So I know how it works and I know how to explain it to people because I used to do seminars throughout the nation and Canada. So I'm very proficient in explaining this to people, whether they're just starting out, whether they just want to do income strategies or speculative strategies or whatever they want to do. So there's a coaching element, and every client gets my cell number. Now that's a pretty good deal. And you can text me and go, hey, Jim, I see something here. I got a question. I see a stock here. I had a question. I see a call and put here. I've got a question. And then we can handle your question. So it comes with coaching. So those are the three. There's a three-legged stool here. One, you get an options masterclass so you can get more educated. Two, you get ideas and a summation of what's going on in the world each and every Sunday night. And three, you get my cell number to text me if you have a question. So that's a very, very good deal. Now, here's what's going to make it a better deal is it's very inexpensive to get started. And that is we have a 90-day subscription for, it normally goes for $397. We're giving it away during this session at $297. So for 90 days, you get all this stuff and you get to keep the class. The second thing is, and I think it's obviously the better one, is the yearly at $897. It's normally $997. So for $897 for the next year, you're going to get trades like I'm showing you here, where there's setups that I think could be very good. You're also going to get that class, and then you're going to get 4 times the coaching. And like I say, I don't know, about you guys, but the firms that I deal with at all these firms, they're not easy to get to or to ask questions to. So it wouldn't be the worst thing to have Jim, the option professor, on your speed dial if you had a question on options, because I could at least give you my opinion on your question. So that's a very big advantage. And so again, you've got the $297 for 90 days, and then you've got the $897 for a year. And I really believe you're getting way more than you're paying for, because again, I try my hardest to come up with the best ideas I can. And I do a lot of research, as you could probably guess. So you're getting, in my view, very high-end research and ideas and a class and coaching on a one-stop shop, for either $297 for 90 days, because many of you people have tried a lot of things and you're not happy with what you got. So why not try it for 90 days? Or if you want to make a commitment for the year, at least you're going to get the thing for a whole year and hopefully be very smart about options by the end of the year. Now, today, I'm going to also give you a bonus, because David's going to put a link up right now, and it's going to be a bonus if you get started today. And what I'm going to do is give you 3 ideas like the ones I just showed you, where the setup is just like it was on PayPal and all the rest of them. And I have 3 ideas that I will give you as a bonus if you sign up right now. And also, I will give you last week's alerts, which obviously you didn't pay for, but I'll give it to you for free if you sign up right now. And of course, you'll get my cell phone to text me if you have a question or to set up coaching right away as well. So the link is going to be coming up. And I do appreciate you guys being with me today. If there was any questions you had for me, my email is optionprofessor@gmail.com. And otherwise, I hope you guys get subscribing. And of course, you get my text number. So we'll be talking, of course. And again, today you'll get those 3 bonus ideas with the setups very similar to the ones I just showed you. So I tried all I could to give you a good deal here today. I hope you guys do take a shot with me, and I appreciate your time. I'm going to turn it over to David here in the next minute or so. If you guys had any other questions, you could put them in the chat box. But again, we can also cover your questions if you become a subscriber, because obviously, like I say, we'll be talking through the coaching sessions as well. I think next up after me is Dr. Daniel Sinig of Trading Indicators. He's got some of the best indicators out there as far as information on how to figure out where the markets are going. So he'll be sharing all that with you. So I'm going to say goodbye now and turn it over to David, and say hello to Daniel, who's a friend of mine, and hope he has a good session.